Hey, what's up traders? Welcome back to the channel. And today we're diving into one of the most essential tools in futures trading, candlestick charts. If you've ever looked at a chart and felt lost with all those green and red bars, well, don't worry, I got you covered. We're going to break down what candlesticks are, how to read them, and the different types of candlestick charts like time-based candles, tick charts, range charts, and volume candles. Alright, so what exactly are candlesticks and why are they important to traders? A candlestick is one of the most widely used tools in trading because it visually represents price movement in a way that helps us understand market sentiment. Each candlestick tells a story about who's in control, the buyers or the sellers. The body is the thick part of the candle, and it represents the difference between a price opening and closing during a given period. If the candle is green, it means the price closed higher than it opened. If the candle is red, it means the price closed lower than it opened. The wicks, the thin lines above and below the body, shows the highest and lowest point that price was at during a given period. These are areas that price did not close. A long upper wick means price went up and then was pushed back down, showing seller strength. A long lower wick means price went down but then was pushed back up, so showing buyer strength. The open and close is important. These levels tell us where price started and ended during the candlestick's time frame. The relationship between open and close is crucial in understanding momentum and trend direction. Candlesticks are essential because they give us a clearer picture of price action than just looking at a line chart. Instead of just seeing a closing price, we get a full view of what price did during that period. Did buyers try to push up and get rejected? Did sellers take control early but then lose strength? Was there strong momentum in one direction, or did price get stuck in a tight range? And when you start getting into analyzing candlestick patterns, we can start spotting key signals like reversals, trends, and continuation patterns, which can help us make better decisions in the futures market. Now let's talk about the different types of candlestick charts, because not all candlestick charts are created the same. Most traders start with the traditional time-based charts, but there are other powerful options like tick charts, range charts, and volume-based candlesticks. And each one tells a different story. Let's break this down. Time-based candlesticks are going to be like your 1 minute, your 5 minute, your 15, and your daily candlestick charts. They even have hour, 4 hour. Any time frame you can think of, there's a candlestick for it. The most commonly used are 1, 5 minute, 15, hour, 4 hour, and daily. Each candle represents a set amount of time. So a 1 minute candlestick, for example, every 1 minute, a new candlestick is printed. On a 5 minute, for every 5 minutes, a candlestick is printed. For a 15, every 15 minutes, a candlestick is printed. And like the daily, every day a new candlestick is printed. Time-based charts are really good for day traders, swing traders, and anyone just getting into trading and learning price action. Time-based candles are great because they give you an overall structured view of the market. But the downside is, if there's low volume, you might get weak candles with no real movement. That's where the other types of candles may come in useful. Now, tick charts, instead of forming based on time, these candles form on a base set number of ticks or trades. In futures, the price movement is based on ticks or trades. 100 ticks equals 100 trades. Tick charts are going to be faster in high volatile market and slower in quiet times. They're really good for scalpers and high frequency traders who want a better read on market activity. Tick charts are amazing for removing noise in slow moving markets. If the market is quiet, you won't get a bunch of candlesticks like in time-based charts. Instead, you only see price action when trades are happening. Now, range charts. These candles form based on price movement. For example, a 5 range chart means each candle represents a $5 price move. These are best for traders who want to focus purely on price action and want to avoid choppy sideways markets. Range charts are incredible for filtering out random market noise and sideways movement. Since a candle only forms when the price moves a certain distance, you get a clear picture of real momentum. Now, volume candlesticks are going to be candles that are formed on traded volume, not time or price movement. If the volume is low, the candlesticks take longer to form. If volume spikes, candlesticks form quickly. These charts are best for traders who focus on order flow and liquidity, like futures traders using level 2 data. Volume candles are perfect for tracking when big money is moving in the market. If a candlestick forms super fast, that means a lot of contracts just traded. This can give you an early warning of big market moves. So now this is the big question. Which type of candlestick chart should you use? It honestly depends on what makes most sense to you when reading the market. If you like structured market views, stick with time-based charts. If you want to avoid choppy, low volume candles, then use tick charts. If you like pure price action, then range charts might be your best friend. But if you're focused on big money movements, volume candlesticks can give you a huge edge. There is no one size fits all in this answer. It's all about finding what clicks in your brain and helps you understand price action the best. Alright traders, so now that you understand what candlesticks are and how to read them, and the different types of charts you can use in futures trading, here's some pro tips before you go. You should try all these different types of charts on a demo account and see what resonates with you the best. You can also use multiple chart types together to get a well-rounded view of the market. Backtest different strategies and use range-based charts, volume-based charts, or tick-based charts along with time-based charts to see what works best. Now, if this video helped you out, make sure to hit the like button, subscribe, and write down in the comments what type of charts do you use? Do you use candlesticks, tick-based, range, or volume candlestick charts? Let me know down in the comments. This is X Viper TV.